Welcome to another episode of Investing Bros. It is Monday, January 30th. We got 2 more days in this first very bullish month for crypto to start off the year 2023. However, in case you guys have not checked out a chart just yet, it looks like we could be struggling once again. You know, we didn't get above, we're going to do TA here in a little bit. We didn't get above that 24,000. I'm going to explain the significance of that during the technical analysis section. Here's the question, though. Here is the question as we start to head back down. Technically speaking, this rally is not over just yet until we drop below. I believe it's going to be somewhere around 20. Let me look at that level real quick. I'm not going to share the chart, but around 22,500. If we drop below 22,500, that will, in this shorter tertiary little trend, that would give us a lower low. That means the rally is over. But let's just go ahead and assume, hey, we're going to the downside. Does that mean that this whole thing was just nothing but a bear market rally, or is this the beginning of a bull market? Either way, dips are to be expected. We're going to be examining that question and a lot more in this episode, so make sure you do not go anywhere. Let's see what else is special about today's show. Oh, I have a new background. And you want to know why I have a new background? Well, we had a phenomenal biz dev meeting over the weekend with a couple of our members over in Discord, the ones that are helpers there, diamond level. And so it was very helpful. One of the things we talked about was, hey, Tim, let's change up the background. And I said, you know what? I knew the Virginia Tech blanket wasn't going to last long, but it held off, made a good course. But now we have a new set. Look for more big changes to come. This is just the first of many. I am also joined by my co-host, the phenomenal, the amazing, everyone's favorite, T-Shroom. T-Shroom, how are you doing today?
I have a proclivity to feel good, and I'm going to maintain that proclivity. So I have not made too many changes to my background here.
I like the sign, though.
Well, perhaps I may have written in too small of a font, but it says Happy Monday, and that quote is from Abe Lincoln. Is that the quote of the day? No, it's not. Ooh. There are a plethora of quotes, and one of which we will be looking at right now. And that quote is, when you invest, you are buying a day that you don't have to work, by Aya Larea. Tim, do you think that's true?
I do. I do think it's true.
Okay.
You know, speaking of, there's something, this is going to be building in the future. It's something I'm trying to get into here in a little bit, but my wife and I had a meeting over the weekend, T-Shroom. We are looking into getting into like a, what do you call it?
Multi-level
arbitrage.
marketing.
I think it's rental arbitrage.
Rental arbitrage.
So it's where you purposely rent out apartments, and the best businesses do like apartments. You rent out apartments, and maybe even small houses, and then you turn around and put those on Airbnb. So like you would sign like the 12-month lease,
sure,
but then you put it out there for people who need to stay in the area for like 3 weeks, 2 months, but they don't want to sign a full lease. They don't want to buy a nightly Airbnb. So that's some business and stuff we're looking to get into. And one of the reasons why is passive income. Yes, there's a little bit of maintenance there. Yes, you have to find new locations. Cool. So as we get into that, look for that to come in on the show. Even the people that we're learning this from, they have a small business where they teach people how to get into this and how to make money doing it. That's nice. A part of Investing Bros. Nice. So look for that information as we learn more to be coming onto the channel. Yeah. So that quote was really good.
Excellent.
You have a weird smile, cool. Like you have a weird thought.
Yeah, that sounds really cool. I'm excited to learn more about that. It's gonna be good.
Okay, your smile. Your smile looks like you're like mocking me, as if I said something dumb.
No.
Yeah. Okay.
When you asked me, guess what we got into with our meeting was about. I said multi-level marketing, and then you come in with rental arbitrage. And I was going to say, oh, it looks like Tim fell for my scam faster than I thought.
Oh, my gosh.
I don't think it's a scam. I'm going to look into it, though, folks. I'll help him.
Oh, my goodness.
I don't think it's a scam.
Wow.
I don't know. No.
We'll see. That one derailed the show. Special shout out real quick. Special shout out to Eric Wallen. If you guys appreciate that thumbnail that you guys clicked on to watch us today, if he's in chat here too. Eric Wallen is in our Discord, and one of the things we do in that Discord is we'll like put in AI art. So that's one of the things that he came up with, found and created. So shout out to Eric Wallen. We're going to be using a lot more. You guys are going to see some really dynamic thumbnails with some of the stuff that happens over in Discord. So just one more reason, if you're sitting on the sideline saying, man, I want to be in this Discord, that's just one more thing you're missing out on. We got big news coming with that Discord, though. So I'm not going to announce what it is just yet. but wait for some more stuff happening just there. You can look in the description down below. You can join our Patreon, and that gives you access to different levels of that Discord.
For sure.
Let's go ahead and do some special shout-outs here, though. Speaking of that Discord, the 3 Discord members of the day I want to shout out is number 1, Crypto Trades. That's also Jose Minyarva, Crypto Ben Franklin, and Mr. J. Shout out to those big 3 who are big supporters of ours. Let's also look at our YouTube chat, though, and shout out some of the early participants. We got Mr. Bitcoin coming in first.
Nice.
Kind of, he solidified that first. 5 of the first comments. Mr. J, both our special shout out, but also one of our commenters here. Who else is here early? A Mellow Fellow is in chat. Justin Eubanks, Crypto Trade, so he gets in both of them. Sack Nasty 86, Henry C. Hernandez, Crypto Ben Franklin gets both of them. Win Peoples, Alex Green, Eric Wallen, Max PP, Brian D, and Cryptex. Shout out to everybody who is in chat. And speaking of you guys who are in chat, we got 66 of you with only 30 of those 4-fingered mittens smashed. Let's go ahead and smash those mittens and get those up as we prepare for the show. T-Shroom, anything that we should talk about stories, anything you want to tease for the second half of the show before we jump into some TA here?
Yeah, there was you may remember this story, there's a Republican, George Santos. He claimed to be Jewish, and it came out that he was not Jewish. Well, there's actually a headline now saying FTX executives maxed out their donations to him. So
did you say George Santos was what?
George Santos, he claimed in his campaign in New York, he claimed to be Jewish, and he was not Jewish at all, I guess. And so he lied about a bunch of other stuff though too.
Who am I thinking about? Who's the guy that like funds like?
George Soros.
Soros. Okay,
yeah,
okay.
George Soros is not a Republican.
That's yeah, because when you said it, that's what went off my brain. I was thinking of Soros, and I was like, Republican?
Yeah, nope.
Okay,
so that's one of the headlines we'll talk about a little bit. There's a bunch more headlines, guys, but the big meat and potatoes story today, of course, is the run up to the FOMC meeting this Wednesday. It's going to be really big. So
old Wednesday.
Stay tuned for those stories here in just a few minutes.
All right. Well, let's just go ahead and jump on in here. We got more people coming in, but you guys need to go ahead and keep smashing that like button. We got a very low ratio. Let's start off over here on the crypto bubbles with some of my favorites, your favorites. Very red day today. So this is the first time in a little bit we've had a red day. We're going to cover some of that in the technical analysis section. Week, it's overall still pretty green, although some of these have turned red on the weekly chart. Monthly chart, I'm going to assume we're all still green here. Yeah, we got a nice Solana coming in the lead with 146 up in January. Of course, that's easy to do when you have massive crashes in December. And then here in the last hour, this was green just a little bit ago, but things are flipping back red. Nothing major, though. The biggest movers, 0.4%. Oh, there we go. AVAX just jumped 0.5%. Biggest losers, 0.5%. So not necessarily too much happening right here. Let's go ahead and look at the Bitcoin chart. And I'm going to start off today on the 4-hourly chart, and then we're going to work our way up. There's something really interesting that was revealed to me by another analyst, and I can't remember the person's name. I was reading this over the weekend, but it's something that's really interesting when it comes to the weekly chart that we should be keeping our eyes on. I'm going to go ahead and tease that one. It's a little bit bullish and a little bit bearish, and I'll explain why. But let's start here on the 4-hourly chart. As you guys have noticed, this will come back up. I'll show you the significance of this level later, but we've been talking about that $24,000 range as the last level. It was the last one staying between us and 25,000. Of course, if we got to 25,000, that would be setting a new high since back here in August. That could have been majorly bullish. This rally isn't necessarily over, but that hard rejection right below it, we literally got within $45 of $24,000. That's pretty big. What I'm looking at right here, just the reason why I'm saying this isn't over yet, is because technically speaking, what I'm looking for is probably us to get below this wick right here at 22,500. If we drop below that low, I think we're going to say, all right, in this tertiary trend, we're starting to set new lower lows. That's going to be the end of this little rally we've had here ever since back in, when did this rally technically start? Let's go, even though it was sideways and boring, we kind of bottomed out before moving upwards back in December on the 30th. So literally like right before the new year started. Yeah, so that's what I'm kind of looking at. The reason why I am skeptical, though, that we are going to continue the upside, first of all, that FOMC meeting on Wednesday, which we were predicting is going to be bearish. This could just be early on that one. But look at that red volume coming in, that red candle. It came in with this big one, kind of confirming a lot of sell-offs. Yes, we've had other big red candles, But notice the last time we had a massive one, it kind of was an indecision point. So this wasn't a confirmation selling. This was some people were still buying. We just had more sellers than we had buyers. So the fact that we had a match right here with both a big red candle in terms of price action and a big red candle on the volume, to me, that's a confirmation that there's a lot more sellers in the space right now than there is buyers. Now, is it just coming back down to these levels? Like, for example, if I were to pull up our Lux Algo action concepts, we're just touching here on the 4-hourly chart where we were just a couple of days ago on the 28th, 2 days ago. So that is, if you're going to kind of have a bullish lean, that's something to keep your eyes on right there. We will pull Lux Algo up here. Actually, let's go ahead and pull up. Let's start with Lux Algo. I usually get to it later, but let's start with Lux Algo. The first thing I'm going to say right here, I have my contrarian settings on. So right here, signal mode, if you guys use Lux Algo, you can kind of change this. I bounce back and forth between confirmation plus exits and contrarian. Contrarian is more aggressive and catches big drops and big falls. What you love to see is you love to see a signal catch it just right. That's going to give some strength to the trend. And sure enough, this most recent sell signal got the exact peak. It came in at the peak that we touched, almost 24,000. Notice on these other ones, yes, that was a pretty good one, but the rally wasn't quite over. This one, the sell signal, it hit on this rally, but we kept moving to the upside. The fact that we kind of pinpointed perfectly is another confirmation. Hey, the sell signals had been missing the point. They weren't really actually good calls because we were in an uptrend. The trend is your friend until it ends, but it looks like this one, it did kind of get it right. So just one more reason from a Lux Algo perspective to say, things aren't looking good. The other good side, other than just the action concepts, we also are hitting our take profit levels here. But notice, again, this levels, we're just scratching the surface. We could keep going down towards that 22,500 that I talked about. So keep your eyes on that. It's not over yet. This rally is technically not over by definition. But if we keep dropping, those are levels that you're definitely going to want to keep your eyes on. Another thing I want to pull up here is the Bollinger Bands. And remember we talked about the constriction we had the other day. Well, sure enough, we did have that big breakout, but we're seeing volatility come back into effect. We dropped below that 20 on the SMA for the 4-hourly chart. So that's going to be another one that's very important. If the bulls want to continue to keep this momentum, we got to get back above that 4-hourly 20 SMA and then get this volatility back up to the upside. Again, it's possible, just seeing some signs that that's going to be a little harder than what we've seen in the past. Let's go ahead and pull these down on the 4-hourly chart and check out what is happening on the RSI with our oscillators. We were overbought for a little bit. We came back down. We're no longer flashing overbought on Lux Algo oscillator, but what we do have going on with our RSI that I think is interesting, we've had this bearish divergence for a while. However, notice we've kind of started to develop a trend. So if we make another rally, and we want that rally to be serious, it's going to be important on the 4-hourly chart that we get an RSI price that breaks through this trend that started back here in January on the 13th. But notice it's been very clean. So this is a very, very nice, another touch for our bearish divergence. Another reason to suspect, hey guys, this is not looking good for a rally to continue. But let's keep moving on, though. I'm going to go and get rid of that line. Let's go up to the daily chart and see what is happening on the daily chart before we make our way to the weekly, and then we'll move over and do a little bit of Ethereum and a little bit of Cardano. Let's see here. On the daily chart, we still have our oscillators are overextended to the upside. Got our bearish divergence, but we've had it for a while. So this is one of those things that it's like, hey, we have our bearish RSI divergence. So Tim, why don't we just go in immediately for a drop down? Well, anyone who was part of that bull run back in 2021 knows, hey, just because you have bearish divergence doesn't mean that it's all over. Look at all of this bearish divergence we had back here during this bull market. Look at this trend line of the RSIs. That's why trends are pretty important. Notice that when we finally broke through this trend right there, what happened? Oh, look at that. That pinpoints that spring just perfectly. I didn't even plan that. That was just worked out that way.
Very nice.
Look at, though, these points. As we continue to set lower highs in the RSI, we kept setting higher highs. This ended up, we needed 4 touches before it actually came in and we started setting lower highs. What's the point with that, Tim? Well, same thing over here. Technically speaking, let me go and zoom back in here very nicely. We have 1, 2, 3 touches now for bearish divergence. That's pretty strong. Is there a 4th coming? We've seen it happen in the past. You don't necessarily want to just trade off of one indicator. So this is one of those examples. I love RSI divergences. I love using them, but I never make trades, whether buying or selling, based off of them alone. I want to see other things come in and confirm what's happening there. What else is happening here on the daily chart? Let's take a look at what's happening with our fixed range volume profile. And this is going to show you the significance of that $24,000 region and why it's kind of heartbreaking we could not get above it if we're looking for bullish price action. Technically speaking, some people are going to say, hey, Tim, this isn't sad. We're going to get another dip to buy more Bitcoin, to which I would say, great observation. That's exactly the point. We'll cover what those points could look like here in just a little bit. But notice when we're looking here at the volume, I got this kind of fixed for you. I'm looking this time that I'm taking in consideration is taking all of this data back, and let's even go out here a little bit further back here. And it's taking all of this price action and where things were bought, where things were sold, where there could be restrictions. The peaks and the valleys are the two most important parts. And what I was noticing here is as we started making our bullish claim, this little mark right here at 24,000, it was the last line of defense before. Just watch. I don't know if you guys can see it very clearly. Watch how this volume just tapers off, and it doesn't just valley, it flattens out all the way. It starts to move a little bit, but all the way up until about 28,000. I believe that if, and this is still possible because things could still happen, if we can conquer 24,000 and make our way up to 25 and get into this little valley right here, it's a pretty easy road all the way up to the $28,000. The problem is, again, 24,000 was our little last line of defense. And at the moment, it's holding up. Again, when I was looking at that 4-hourly chart, it's not just that we rejected there, it's that the volume came in to confirm it, meaning bears have kind of looked at these charts and agreed, hey, this is that last line of defense, 24,000. So if the bulls want a serious run up to 28,000, it's going to be very important to get over 24. After that point, things actually could get a lot easier for bulls to keep rallying. But in case you're wondering, hey, Tim, what do you mean 24,000 significant? That's where I'm getting that one from. What else do I have here? Let's go ahead and pull up our SMA on the daily chart. Oh, come on, I want to take my fixed range volume profile down. And I think I'm going to go ahead and switch to my other chart that has more stuff here. Yes, and you guys are going to see these arrows come into play here in just a second. But let's start right here with our SMAs on the daily chart and take a look at what is happening here. So this is something that happened here a little bit ago. We did get above all four, the 20, the 50, the 100, and the 200. It would make sense for us to come back down to our 20 here. So keep an eye out around the $22,000 region as this 20 keeps climbing. Watch out for 22 as the first level of support to keep your eyes on the 20. Then you're also going to be looking at 19,600. This is significant when looking at both these charts. So if I were to pull up my SMA on this one as well, I'll go ahead and just do that for you. 200 is sitting right here with a nice little fat level of volume at 19,600. I could go back and show you, but the fixed range volume profile, this is a key level that is going to be retouched. I believe whether we get above 25,000 or not, this is a level that we were going to retouch at some point anyway. But these are two levels. If we're starting to come back down, I'm using the SMA to say, hey, keep your eyes on those levels. Watch the 20, watch the 200. The bullish sign here is, again, we've talked about this before, but we're having a couple different golden crosses right here. I believe that's the 50 just crossed above the 100 here a couple of days ago. Last week, we had the 20 cross above the 200. So it's always good to see the lower time frames or the lower chart, lower moving averages crossing above larger ones. But watch as they start to move back towards support. Teaser for Ethereum. Ethereum is one of the coins that's already looking at its 20 SMA. And that I'm going to talk about that here a little bit when we do Ethereum TA. So that's the first level I'm looking at. Can we hold that 20 SMA, or do we need to come all the way back down towards the 200? What else do we have here that I want to take a look at? Let's look at this. Is another one that I don't talk about very often, but this is another bearish indicator that is coming up, and I'll just go ahead and full screen this one for you guys. MACD. The MACD is literally, that's about as close as you can get without crossing. The MACD is that close to kissing and turning bearish once again. So keep your eyes on that. Another kind of bearish indicator coming in for Bitcoin, saying, hey, this rally was nice, it was good, but it might be time to cool off just a little bit. And again, the levels I'm looking at right now, 22,000 is the first line of defense. If we can't hold that, now we're looking down at 19,600. But guess what, guys? I'm going to go back over, well, let's keep it on the cleaner chart. Let's take down this SMA for you. This would be a beautiful thing, because even though we didn't get above 25 yet, I'm assuming we're not going to. That's what I'm about to say. We did get above our $21,000 price here, $21,400 back in November. Even if we fell all the way back to 19.6, let's say we end up finding support around 19.6 and then rally, that would give us the bounce off of the resistance right there, the falling wedge pattern. And then we can start to make a push to potentially set a new higher high down the road. And now we're starting a process of setting higher highs and higher lows. When people are asking the question, and here, go ahead and go on my screen, T-Shroom. When people are asking the question, is this a bear market rally or is this the beginning of a bull market? Here is how you will define. We will not know the answer to that question until the dip happens, and we're going to see where the dip gets to. If we go back down all the way to about 15,500, or if we go even lower, then we will be able to confirm this recent rally was just a bull market or bear market rally. But if we can bounce off that 19.6, or even as long as we stay above 15,600 and we're sitting a higher low, that would be the answer we would need to say, hey, this actually is very early stages, very beginning. It might not be the most explosive, but the beginning of that bull market that a lot of people have wanted. Let's move out and go back to my screen T-stream. Let's move out to the weekly chart, though, and look at something that happened here. And I'm going to give you guys kind of both a bullish and bearish picture of what's happening here. I think this is more bullish than bearish, but I want to be fair to the timeline of what's happening. So what just happened this last week here? This would have been yesterday, I guess, because, right? Yeah, so last night when we closed this candle, we completed a 4-week green trend. That's important. 4 weeks of green candle bodies. Why is that important? Because historically, except for 2 times, we have seen this lead into much bigger rallies, showing that the bottom is in. What am I talking about? Well, I went ahead and highlighted some of these features. You guys can go back here in the summer of 2021. 1, 2, 3, 4, 5, 6. I think we have 5 in there, right? Yeah, 5 there. Yes, we had a little bit of a dip coming, but it did not come back down to the beginning of that trend. This was a bullish 5 weeks. Same thing here in the bullish, the bull rally of same 21, but here in February. Yes, we were getting close to the top, but it was a while before we went to the downside. We got our 1, 2, 3, 4 weeks, had a 1 week dip, and then we continued to the upside, setting new highs. Same thing, we had it several times during this rally back in December. We had it happen in October. We had it happen in July. Yes, we had a little dip here, but again, set a higher high right there. So it's just one more reason. We had it start off here back in April of 2020 after the pandemic started us off. Yes, we had multiple weeks that went bullish there. Again, we could keep flowing back. I'm not going to show you the entire history of Bitcoin. I'm just showing you several instances where there was bullish, more than 4 weeks of bullish candles and what the trend did afterwards. Yes, red candles come in, but they continue to the upside. So we have another one back here in May of 19, also back in March of 19. Let's look at the 2 opportunities. I could show you several bull rallies where this happened and it copies the exact same trend. I just want to start with last bull trend. The 2 times, and this is where it starts to get a little bearish, the 2 times that we see more than 4 weeks of green candles and then it continues to the downside is during bear markets. We had one back here in April of 18, and we also had one back here in June of 14. All right, so here's where it gets a little bearish. Well, what are we in right now? We have not confirmed a new bull market. So meaning, could this just be another one of these 2? Yes, traditionally in other opportunities, we see 4 green candles on the weekly chart be bullish. But in this case, are we just seeing another bear market rally and that's going to continue the upside? Okay, sorry, continue to the downside. Here's the only thing that I'm looking at and I'm saying, hey, this is a little bit different. There is no peak below this level right here. There is no peak below this level right here. So in both these situations, the peak level after these 4 candles did not set a new high. In this case, it's very weird, but technically speaking, we did set a new high over 21,000. I would much prefer us to get over 25 and beat the August rally, but we did beat the one back here in November. And so this is just a little bit different. So on one hand, I could very easily, and I want to give signs that the bears could make this argument, hey, Tim, this is just a bear market rally, just like we had back in 14 and 18. Don't read too much into this, and that would be a fair observation. But there is a difference here, and that difference is back in 14 and 18, we did not set higher highs than previous peaks, whereas this year we did. So I want you guys to do with that information what you will. You might be asking, Tim, why'd you bring this up? The reason I brought this up is because, again, let's watch what happens in this next dip to confirm, was this just another bear market rally or was this the beginning of a bull market? There are signs of this being a beginning of bull market. I don't even need to talk to you about the video I made last week where we talked about all the different signs, the bullish RSI divergences, the way that we had volume spikes, the timeline since bear markets to bull market, the tops of bull markets to the bottom of bear markets. This is just one more. It's very confusing, but it's one more sign to me that I still am holding on. I think that we can still say with somewhat certainty the bottom is in. The question is going to be, how viciously do we come down? And honestly, what Jerome Powell says on Wednesday is going to go a long way into dictating what that looks like. With that said, that's the Bitcoin technical analysis for today. I know there's a lot thrown at you. Just in case you're wondering, I'm not here to tell you guys exactly what to do. I'm here to show you what's happening on the charts, help you walk through that information and know what to do with it. Let's move on and be very brief before we get to our market opening, because this is Monday after 2 days of not being open with the stock market. Very interested to see what happens with those opens. Let's start off here with Ethereum.
Really quick, before you get into that, I want to see those likes higher. Let's get the likes higher, guys. Thank you so much for watching, especially if you're the first time in here. Really, really excited to have you in here. Let's get into Ethereum.
Let's see what I have here. Ethereum continues. Let's see. I'm on. I went to ADA accidentally. Ethereum continues to play really important on this rising level of support. Again, this was support way back here all the way in June that we used for a while. Got turned into resistance very slightly, but it's continuing to hold up. So I'm continuing to watch Ethereum on that one. If Bitcoin drops, I could see Ethereum dropping as well. Although here's the thing about Ethereum that I will say, and we've been talking about this in the Discord, Ethereum is not getting the same momentum rallies that we are seeing happen in likes of Bitcoin and Cardano, and of course what we're seeing in Matic. Ethereum is kind of held off, and it's been kind of more conservative. One of those things that are showing us that, I told you guys earlier, but I'll bring it up again, is when we pull up the SMAs. Look, unlike Cardano's one. We'll talk about Cardano in a second. Getting rejected at 200, but Cardano's well above the 20. Bitcoin was well above the 20. Let's look. Matic was well above the 20. These coins that had some great runs are well above the 20. Let's go. Solana is the last one. Solana well above the 20, although it's a little closer than I thought. Ethereum came back down and is kissing its 20. Is this going to be a sign of hey, Ethereum didn't get the massive rally? Is Ethereum going to lead the next one? So maybe we're going to see the entire space dip after Jerome Powell. And then Ethereum is going to be the one most primed for an upward movement. That's something that I'm kind of looking at right now and saying, all right, that's something to be interested about. But let's continue to watch that. It's sitting on the 20 SMA. Let's pull up our fixed range volume profile and see what is happening with that. And I'm going to go back all the way probably till, let's go back all the way to May of 2022. So I'm going to go ahead and all the way back here currently. Some levels to keep your eyes on. We're kind of hovering right in a fat level of peak. If we move to the upside, what I'm going to kind of keep my eyes on with Ethereum, this next little push, 1851 is the south end, and then after that, can we get above this last push at 1985? If we're able to do that, yes, we have a peak right here, and yes, we stopped out at 2,000. I almost said 20,000, 2,000. But in reality, if we can get back above 1978, it could be easy ride back up to new highs. Probably looking at some of these lows we had back here around 2,300. 2,300 is what I was trying to say there. If we fall to the downside, some levels I'm keeping my eyes on with Ethereum, you guys can see we're already hovering around these peaks. So what I'm actually looking for is the bottoms of this valley. Keep your eyes out for 1,393. I think that this could be a very interesting level. This is former resistance that we had back in this range as well. It could drop a little lower. It could come down all the way to this peak right here, 1330. But to me, this valley, especially with what's happening with Ethereum, there's some stuff coming out with Ethereum that is it already happened, or T-Shroom, are we still waiting for people to be able to unlock their staked ETH?
No, that has not happened.
Okay, so I think that's going to be one of those things. I think that's going to be majorly bullish. Some people say that it's going to be bearish because they're like, when it gets unlocked, people are going to take their Ethereum off. I'm going to say no. I think that when you can unlock your staked ETH, it's going to be more confident to any person to put more money into it, to stake more ETH. So keep your eyes there. That's what I'm looking at, though. When I'm talking about Bitcoin to 19,600, I'm saying Ethereum 1390. That's what I'm kind of looking at here with Ethereum. Same thing, another reason to think, Ethereum's kind of leading the charge on what's happening here. Let's pull up, I got to go to my other screen, I guess, to look at this one. MACD. Yes. MACD crossed, I told you guys, on Bitcoin, it's about to cross. Same thing, Cardano's about to cross. Ethereum crossed here a couple of days ago. So Ethereum seems to be doing everything a little bit ahead. Again, it didn't get the same momentum rally that the other coins got, which leads me to believe it's priming itself up for a different run. I think next rally, watch for Ethereum rather than like Bitcoin to be one of the bigger leaders of that push. Bitcoin definitely is still going to have a good push too. I think Bitcoin is slowly but surely starting to set itself apart from the rest of the crypto space. People are understanding the differences between the two. But watch Ethereum on the next run to have a nice little rally there. Let's move on to Cardano. Let's take a look at what's happening with Cardano. Let's go back to this chart. We have some more stuff drawn. Here's what's really interesting. I actually got to look at both charts here. We stopped just short of some levels that I was talking about being significant. We got above our falling wedge pattern breakout right here. So you guys see this level of resistance, level of support. We got to that 38-cent zone for that prediction. The next levels we're looking at potentially is that prediction made by the Cardano community up at 49 cents. By the end of January, again, not happening. We can probably just go ahead and call that one. Cardano's not going to get to that prediction. However, there still is the falling wedge prediction all the way up towards, do I have it marked on this one? I don't have marked either. 56 cents is the level to watch for Cardano based off the falling wedge pattern that it's been in. I'm talking about this level of resistance, this level of support. It sends us up towards 56 cents. So watch for that in February, maybe even early March. But this zone, I know I'm bouncing around a lot, so I'm sorry, guys. But this zone, 40 cents to 43 cents, is a very key zone, especially when you're looking at our fixed range volume profile. I'm also going to show you some key levels using our Fibonacci. But yeah, so this marks the beginning of this little peak right here. There's a valley right there in the middle around 41 cents, and then another peak at 43. This is also the tops we had back in November. So keep an eye on it. If Cardano can make one more push getting up into this zone, if you have not taken profit already, especially with the FOMC meeting coming, this is not financial advice. You guys do whatever you want. I'm looking at this range and saying, hey, it's a little too early to push up north. I'm going to probably start taking some Cardano profits right in this region if we can push back up to 40 cents. I'm completely fine, by the way, guys. Like, that's my range I called before, just to give you insight on like how I trade and how I take profits. I'm not in a desperate push to take profit here. If it doesn't get to my take profit level, I'm completely fine to hold off. It will get there again, wait for another dip, maybe even accumulate a little bit more. And then I'll wait for it a little later of a time to take profit. And then if we dip again, these levels might just change completely and I go up a little higher. I'm not afraid of that. I like taking good take profits, good buys. Sometimes you miss them by a little. Don't FOMO in or FUD out of any move. Pick your points, stick to them. In the long run, you're going to lose some, but you're going to win more than you lose. What else is happening here with Cardano? Like I said before, we're about to see a MACD cross. Let me pull that one up for you guys. Similar to what we see with Bitcoin. It's doing the exact same thing. It's not as close as Bitcoin's is, but it is definitely heading back to the downside. You can see these candles. These are so-called candles. Candles kind of moving to the downside. The blue line is coming back towards the red. So watch for a bearish MACD cross within the next couple of days as well. Let's see here. The other thing that I'm watching for, and you guys know I'm talking about Bitcoin, the EMA ribbons is one of my new favorite indicators I like to look at. Did we pull up? Yeah. So on the daily chart, we did cross and turn green here just a little bit ago. But the real significant thing about Bitcoin is when you move out to the 2-daily chart and the fact that we just turned green on 2-daily for Bitcoin for the first time since back in December. Cardano, we didn't quite get there. It was looking close. Didn't mean to move you. It was looking close. You guys can see that red 20 is really starting to climb above other SMAs. But with this dip looking like it's going to come, I think we're going to hold off for another rally. So if this could happen, this would be really good. I'd love to see this turn green and move to the upside. But I think that Cardano is going to hold off on this little rally and move on and wait for the next one to turn green. So keep your eyes on that one as well. Let's see what else we have going on here. Let's pull up our SMAs and see what Cardano is doing. Again, kind of different than Bitcoin and Ethereum, where they were above. On the daily chart, we didn't ever get above that 200. In fact, this push that we just made here a day ago got us right to the 200 SMA, and we are rejecting off of it. So what I'm looking at with Cardano, watch again the 20 SMA and potentially even the 100. Another thing I'm looking at potentially for some support to say if Cardano crashes, where are we going to go down? Let's pull up our Fibonacci level and start with the peak that we had back here in November, and then we'll move and actually extend that a little to the upside. Some key levels here you guys can see when I go down to the linear chart, we rejected right at the 0.786 level. There's going to be a golden pocket below us right here at 36 cents. Another thing that I'm kind of watching right down here as we get closer towards 0.382 around 31 cents. You guys see we had a little bit of pocket, a little bit of volume hopping right in here back in December. In fact, if I pulled up our fixed range volume profile again, you're going to see that there's a nice little pocket right between 30, I believe it's 29 cents and 30 cents. Let's see right here. Yeah, so valley right here at 29 cents, peak right here at 31 cents. This is a strong level of support. It was a level that a lot of people were calling for the bottom of Cardano, and then we ended up dropping below it. So if we see a big crash on Cardano, those are my levels. You can see there's a lot of volume in here kind of staying steady. It gets more interesting when we hit 31 cents, and really bad, we're going down to 29 cents. So that's my range. If you guys are wondering, hey, Tim, when we fall, where am I going to be able to purchase more Cardano? I think this 31 to 29 cent region is a very, very good looking region for Cardano. Could we go lower? Absolutely. But again, there's a lot of signs on some of these altcoins and even Bitcoin that the bottom is in. And if you want to hold off some money to prepare for a doom and gloom scenario, go ahead and do it. But a lot of people are going to have a lot of money sitting in dry powder because they're waiting for new bottoms that never come. That is all of the TA that I'm going to do this morning on crypto. I ran a little long, so let's go ahead and jump in T-Shroom and look at some of those stock market opens. Do you have any thoughts about anything else before we get there?
Do I have any thoughts? Yes.
We definitely. This is good. I saw we did jump up to like 200 concurrent at one point.
Yeah.
So that was kind of cool.
It's been good. It's not just me who's had thoughts today, though, while you were doing your TA.
Other thoughts?
Josh Denham joined. He said, just now joined, catching up. Glad to see the blanket is gone. LOL.
Yeah.
So, as you can see behind Tim, he has a great new setup. Somebody actually said, "Wait, is that the Bitcoin Bit Academy background? Is that Kelly Kellum's background?" Somebody said that. So it was pretty funny. That is actually what we were kind of going for. So
I was looking at a couple different sets that I want. I think what I want. I told T-Shun this morning, and we'll jump into stuff here in a second. I think right here over my right shoulder, I want to get one of those Bitcoin neon signs, but hopefully we get one that doesn't like make the whole camera go crazy.
There's a couple of good options here on my screen. You can see you've got
the piggy bank.
Got the piggy bank. Got a mining one. Got a. So let us know in chat which one you think is good.
I kind of like the one with the hand.
I was looking at the piggy
coin.
bank, but yeah. Anyway, so let's go ahead and slip right on into the market open here. It's looking good for inflation print because energy is lower, guys. So check this out right here. You can see natural gas coming in quite a bit lower today, breaking through some key support levels here. And just going lower. So almost reaching the bottom of what the fixed range will show you. We are almost at the bottom of that. So not sure if that's going to ever turn around at this point, but we shall see. Oil coming in lower as well, down 1%. It got rejected there at that $83 line of resistance that it was pumping towards. Didn't even get that high. Didn't even wick that high. So now it's on its way back down. So hopefully things will be a little easier at the tank this coming month in February for you. We are at market open. New York Stock Exchange is open. Folks are trading and trading lower. And you could say, a little bit more than moderately here as the NASDAQ down 1.2, Dow Jones down 0.2, and the S&P down 0.6. Let's take a look at the NASDAQ here, which got up above that line of resistance and has now, I wouldn't say it's completely confirmed it as support, but it's also got up above its 200-day moving average, simple moving average there on the 1 daily chart. So that's pretty cool. The Dow Jones has been above that range for a while now and continuing to trade. Not making a higher high here though. If this does come down, which let's see what the MACD, MACD histograms are decelerating or at least plateauing there. Then you could see a lower high there for the Dow Jones, which wouldn't be great to see, but honestly, wouldn't be the worst thing in the world, especially if you could print a higher low there. So moving along, those are going to be your index opens. Okay, fine. I'll take a look at the S&P. We looked at the NASDAQ. We looked at the Dow. How can you leave out the middle child there, the S&P? So there it is, coming back down, wanting to probably, if I extended this out, wanting to come test this line of what could be support now that it's flipped from resistance. Could be really interesting there to see. I mean, this is all coinciding pretty well with the FOMC coming up on Wednesday, which is kind of the big story there. Well, let's look. Red across the board on crypto, kind of what we were expecting. Had a big run up last couple weeks, and now not so much. But let's see who's leading the way down is Matic, at least on this watch list. And let's see who's able to retain the most. It looks like it's going to be Bitcoin is retaining the most. Yeah, so that's pretty good. Maybe Litecoin, but that's just my watch list. Let's take a look at Biddy here, guys, because as we do see crypto start to turn around, you might be considering taking a short position on Bitcoin, considering temporary. You want to be very careful with this. It's not an instrument that's designed to buy and hold like Bitcoin is. This is an instrument that is designed for hedge traders to just get in and take a little bit of risk off a long position into Bitcoin. So as you can see, it's well within the second layer on the daily charts, well within the second layer of the Lux Algo reversal cloud, the bottom one. And so, it definitely is overdue for being bought. It's very, very oversold at this point, at least on these charts. And as you can see, the histograms are moving bullish on the MACD and the RSI still in the oversold zone there. So that's going to be an instrument that you could potentially benefit from a correction here in Bitcoin, and it was like Tim's thinking could be going back down to 19,600. So you'll want to watch potentially and benefit from that, especially if you have a large position in Bitcoin, like I know so many of us do. Moving over into the metals, gold giving back a little bit this morning, but not much, and then silver having a nice little morning pop up 0.8%. We won't linger here too long, folks, but as you can see, silver has really traded sideways through December and through what we've seen of January so far, and gold has done something pretty much the opposite. It has really rallied in that same amount of time, up. Let's see, up from percentage. Let's see, from pretty much the beginning of December to where we are now, up 9.11%. So up pretty well there in gold. I rode it a little bit in here, mostly through here. Didn't take too much risk into that, but made a little bit of money. So let's see here. Microsoft down 1.5% in our big tech analysis here. Google leading the way down. Tesla down 1.5%. So big tech kind of red on the day. That's kind of to be expected with the NASDAQ here down and kind of leading the way down for those indexes. NASDAQ, of course, being quite a bit heavy tech. Let's look here at the bond yields. Bond yields are up today. Dixie is flat. Let's take a look at the Dixie. So the bond yields being higher, meaning that there is less demand for U.S. Treasuries, meaning where's the money then? So if bonds are going up, that means that if bond yields are going up, but the indexes are down, that means that folks are moving into cash. There's more cash on the sidelines because if you're not buying bonds and you're not buying stocks, you got to be just sitting in cash, or perhaps you're buying an altcoin. but certainly the entire market isn't doing that. So there's going to be your Dixie just continuing lower. We want to see the Dixie continue lower, and there will more than likely be a pretty big movement one way or the other, depending on what we see from the FOMC. Cannabis coming in pretty red. Mid-cap stocks looking pretty red. Guys, if you didn't get into Tesla, if you're feeling that FOMO, mid-cap stocks are actually pretty decent. They're kind of like the altcoins to the big cap, right? Ginny, DraftKings, Snowflake, Robinhood. You could consider these kind of like altcoins to the likes of Microsoft and Google, or Tesla in this case. If you didn't get on Tesla, you might benefit from one of the other ones. I know Lucid, which is a competitor to Tesla, is doing really well today. And our oil producers coming in red. So kind of a big question mark of where is money rotating into. Maybe our stories will shed some light, although I don't think they will. We're going to start off with a little bit of a firecracker story here. We usually don't get into politics too much. We try to avoid it. Unless it touches crypto, in which case today it did. And this is because, just to remind you guys, this was the headline from 2 days ago. So he's still making waves. George Santos delivers speech on a Holocaust remembrance after lying about being Jewish. So he's digging his hole deeper here. The first thing that you have to ask about George Santos, why hasn't he stepped down? That's kind of, he's a New York representative, I believe, congressman. And if you don't know the story, he pretended to be Jewish. He said he was Jewish. He was not. And now he's just 2 days ago giving speeches about the Holocaust remembrance. So this guy is he's breaking all the rules. But maybe that's what he wants. Maybe he's got some kind of weird perverse incentive here going. But anyway, why is this relevant? Why are we covering it? Well, it's because FTX executives were investing in this kind of a politician. They maxed out their donations for Representative George Santos, in the New York congressman. So it's pretty wild. But there were some other things, and I wasn't going to cover this, but Brian D in the chat brought it to my attention that this CNN headline, Santos doesn't appear to contest authenticity of resurfaced drag photos. He said he had fun at a festival in Brazil, and these are the images of him in drag there in Brazil. Not necessarily a bad thing to do that, but if you're running for office in the U.S., it's a little bit testy, a little bit of a risk to do something like that. But he went and felt that it was appropriate to pull the trigger on that. And this is the kind of guy, this is the kind of elected official, kind of legislator that FTX executives felt comfortable backing the campaign of. So pretty interesting there. Tim, do you have any thoughts about this guy? It seems like this is the first you're hearing of him.
Well, no. Now that I'm looking at some stuff, I definitely heard things. Heard things about him. I mean, you said he's a Republican from New York.
Yeah, that's right. Yeah.
Kind of a little bit of an oxymoron.
It's an anomaly in and of itself. Yeah.
You know, as far as the drag thing, like every person's like thoughts on that is a little different. From a moral, ethical, and anyway, my thought would be is like if he's a Republican, it just isn't a good look because more often than not the Republicans are going to be a little more, they're going to frown upon that a little more. If he was a Democrat, I would think that, you know, it's kind of like, hey, you know, it is what it is. People kind of roll with that these days. No, this is, I think, just a proof story of hopefully things like this come to an end. But he's just a character who he can get reelected because he can make money. And then FTX, they max it on him. That's just the epitome. He'll do whatever it takes to get money so he can keep winning his campaigns. We see that all over in politics. There's lots of people who are like, how the heck, both Republicans and Democrats, how the heck does this person keep getting reelected? And the simple answer is they got a lot of money and they flaunt it in our face. And it's like they play by a different set of rules. They do things that are questionable when it comes to ethics and morality. And they get some fancy speech and then make some more money and get away with it, versus if any other person did that, they're more than likely losing their job. Their life is taking a very different path. So it's just kind of sad. Hopefully things like this come to an end here very soon.
Yeah, well, that's unlikely, but it's something that
my thing is, I think, you know, the combination, and we'll move on from this, the combination of, and I don't like cancel culture whatsoever, but one of the things in cancel culture is that it brings a lot of things to light. Like that's something that it's taken it too far. I am never against truth coming to light. That's something I'm a very big believer in, is what you do in the dark will come to light. So you should get out ahead of it. You should be very honest about your faults. Maybe not to the public, but definitely to other people, so that, you know, especially if you are a believer in Jesus or any other religion, because I think it's a pretty common thing that religion frowns upon immorality. If you've done something wrong, get it into the light yourself so that other people don't do it to you. But same thing with that. And then you start talking about maybe the future of decentralized currency, or even just crypto in general, blockchain technology that brings things to light. I think you're going to see a lot more corruption be unearthed with where the world is going. Some is going to be really good, and some is going to be kind of like, all right, that was a little too far. Cancel culture is running a little bit too rampant these days. So
yeah, well, absolutely. And what I'll say is that as we get into, we're not going to leave FTX. There's a couple more stories about FTX updates, but as I'm going through those, let me know in the chat, what would you rather see in the few seconds of this video? Of these live streams, it's come to our attention that there's an ad that comes on and it may cut off our opening dialogues.
Yeah.
So what would you rather see? Would you rather see like a countdown, or would you rather just see live data of from money.com? This is just kind of the opening numbers here for the Asian markets, just to kind of get a gauge. Would you like to see a Bitcoin chart? What would you like to see? Give us an idea of kind of what you guys want to see there. And it isn't necessarily what we'll go with, but is that what you want to see? Do you want to see George Santos and Dragon Brazil? All right, let's go ahead and get into, so let us know, and let's get back into these stories. So this one's pretty big. So the DOJ demands communication ban on SBF, and why? Well, he was reaching out to former employees of FTX using the Signal app, which, if you've never heard of that, Signal app is hard encoded. I know that it works and is pretty sealed tight because that's what we use in the Army. I'm in the National Guard, and all of our communications have to be through the Signal app. So if the U.S. government trusts it with their employees, more than likely, they're not the foreign entities, or the government itself is not able to penetrate into that app, penetrate through the encryption, and be able to find out what's being said. So how they found out he was texting his employees in this case, I think, is because he was also, it looks like he was texting judges, not necessarily that are going to preside over him, but just judges using the Signal app. And so it's pretty wild. He's not giving up here, folks. He's not giving up without a fight. Well, there's another story here about FTX as well, and that is that Australian regulators had FTX under surveillance at the time of the collapse, document revealed. Not going to go into the details here too much, guys, because the FOMC story is much bigger, but basically what this reveals, I read a little bit of the details, ultimately is like, the Australian government, their equivalent of the SEC, they were doing a lot of digging on FTX and asking a lot of questions and they were not regulating. Their regulation is behind there for crypto, as it is in so many countries. And essentially, FTX's lawyers were kind of going back and forth with them, and not displaying much data, but saying, "Hey, we're licensed in like all these countries, so we should be good to go." But the SEC there in Australia, which I think is the ASIC, they wanted to do more digging. So it's pretty crazy that they may have they were so close. They may have found out of the amount of fraud that was going on, and the narrative could have been a little different. But more than likely, users of FTX still wouldn't be able to get their money. We'll see how that shakes out. Well, a couple more stories here. Matic Trader was able to turn 80,000 into 4 million as Polygon ends up the month up 50%. So I'm sure a lot of you really had a big smiles on your faces over the weekend, or Thursday, Friday, going into the weekend, as Polygon had a huge run up. It was pretty awesome. Let's see what else we got here. New York regulator investigating crypto exchange Gemini over FDIC claims. Probably not going to affect the markets too much because Gemini is already pretty close to shutting down there. But more than likely, it's kind of on its last leg with all of the money that it's not going to be getting back from Genesis. So this is just adding insult to injury that a New York regulator is looking into them. And then lastly, we'll end on a good note here before we get into the FOMC news. And that is that the Premier League has inked a deal with digital trading card platform Sorare. So Sorare is one that we've definitely heard about before.
Yeah. And
the Premier League, it doesn't really get much bigger than Premier League in European soccer without being the Champions League itself or FIFA. So, it's pretty big. It's a pretty big deal. I think the Premier League had been holding out on really associating itself or accepting many promotions and sponsorships from the crypto industry. So the fact that they were able to break through here is pretty big news, and that is news as of today. So pretty awesome stuff there. Well, that's going to wrap out just kind of our miscellaneous stories, things that we don't want you to miss out on and miss knowing about in case you're invested in the platforms or the coins that are associated with it. Obviously, Gemini and FTX there. Probably you can't do too much quite yet about the funds that may be locked up in there. But ultimately, there's a lot of things to be happy about here, especially if you're involved in the Sorare trading card platform. Well, are we ready to go ahead and get into the FOMC preview there, Tim?
Let's do it.
Cool. So the FOMC is it's going to be happening. So the meetings start tomorrow, and then over the next week, the markets are going to respond to not only the decision that comes out, but also what happens with the press conference that comes after shortly after what happens at 2:00. So you can expect the rate decision here. I have it as 1400 hours. That's military or international time for 2:00, 2 p.m. and Eastern Standard Time. And that is when the decision is going to drop. It's forecasted for 4.625. Now, that's a super precise estimate. It's not a range. It's more appropriately expressed as a range. But that'll be a little bit different from what it was previously. So, and then that'll be directly followed at 2:30 by the press conference. And we'll be anticipating that. It's unlikely that we'll be able to go live for that, but we might. So we'll see. I'm not sure. It'll depend on my schedule.
Yeah, so that's going to be one that I'm not going to be able to be a part of. But yeah.
So let's kind of open it up, Tim. So my question would be, what is the well, before we do that, let's go ahead and look at what the predictions are right now before we get too close. So they're pretty much unchanged here, guys. So as you can see, over the last month, it's been predicting 4.50 to 4.75
and hence the reason for the
rate.
4. So what they're really predicting is 4.6, whatever you just read, and
right.
that falls into that range. Yeah.
Right, so it kind of falls the average of those two. But that would represent a 25 basis point hike.
Mm-hmm.
So that is what is almost certain, as you can see here, a 98.9 as of today % certainty. And you might say, well, T-Shroom, how are they predicting that certainty? It's almost like they have a a telescope into the brain of the FOMC, of Jerome Powell himself. Well, it's the CME futures market, which is regulated by the SFTC, is something that is able to predict what is going to happen. Doesn't mean that they're right. In fact, I would love to know how often they get it right versus how often they get it wrong. But ultimately here, they're pretty certain, as you can see. And it's on both sets of tools. This set of tools here and this set of tools are both predicting almost the exact same thing here, which would be a 25% basis point hike. So what happens if it's 25? What happens if it's 50? Or what happens if it's 0? What happens if we get a beat?
Yeah, so it's going to be 25, and not just because of this tool predicting it. It's going to be 25 because Jerome Powell's made it very clear in his most recent press conferences that they're glad that inflation's going down, but it's nowhere near where they want it to be. They want to keep getting aggressive with it. He's even kind of highlighted the plan is to get out in front of it, so continue to raise up. He's kind of hinted at 5.1, which means that after this one, we still would need another 50 basis point hike. Mm-hmm. So whether he does all 50 in March or whether he does 25 again and then 25 in, I guess the next one's probably May, I don't know.
I was pulling that up right now.
Either way, he wants to get up to 5.1. That's what he has said. And here's the reason why I think that we're going to see a sell-off happening. And the question really is, and this the thumbnail kind of alludes to it, is the sell-off starting early? Is the market starting to price in? I saw something over the weekend. I was looking for the data of it, couldn't find it, but I saw that there was a good amount of someone was saying that money was being moved onto exchanges. That traditionally is a sign of people wanting to take profit here very soon. So are people preparing for that Wednesday? Are some people getting it out of the way early? We'll have to wait and see. But the reason why I think it's going to be bearish is because what has Jerome Powell been talking about over and over and over again? He keeps talking about how the job market is still too strong. He keeps says that the demand is just way too strong. He's highlighted after saying for a very, very long time that there's going to be a soft landing. He's kind of been more open recently about saying things are going to get rough. There is going to be a recession. The White House has started going to say, like, because they don't think we're currently in one. They're going to say, like, all right, hey, a recession is coming. Jerome Powell's come out and said, hey, a recession is coming. People are saying a recession is coming, meaning it has not happened yet. Well, for a recession to come, there's got to be more pain in the space. And right now, as of today, the economy looks to be moving in the right direction. Well, guess what? Inflation is going to start to pick up because the more confident that some businesses are, they'll keep hiring people. They'll keep expanding their business, which means they'll keep borrowing more money, which means there will be more of a demand for banks to keep raising things and for the money to be printed more. So what he wants to do is kind of suppress that. He has hated this little rally. Can he make it go all the way back down to where it was before and set new lows? I don't know. I don't think so. But I do think he can suppress it and bring some more fear into the space. And so watch for a 25 basis point hike to be announced. And then in his press conference, pretty much he's going to alliterate saying, hey, we have no plans of – he's going to go even harder in that we have no plans of cutting rates. Because while some people are calling him – they're calling BS on him and saying, hey, we're going to see rates cut at the end of 2023. He's been very adamant that they're not going to. So watch for him to potentially even say, we're not even sure that 5.1 is going to be high enough. Watch for him to bring up maybe even things like, hey, guess what? We have not had numbers come out since it's gotten ridiculous. Eggs. Food is projected more than likely when we get the announcement in February. Watch for the price of food probably to have gone up in inflation. Housing market is still climbing. I know we're all expecting the housing market to take a nice little dip in the future, but as it stands right now, the housing market still is moving towards the upside. These are all things that can lead towards higher inflation numbers. So watch for Jerome Powell to be more speculative that he does not like what inflation is and say maybe 5.1 is even high enough. Maybe it is where he ends up finishing because we all know Jerome Powell's changed his brain on these things a lot of times. But watch for him purposefully to put some FUD into the space. Watch the stock market, watch crypto take a little bit of a bath, come back down. Again, that's why I told you guys earlier in the video, if you didn't watch it, I gave some levels like Bitcoin, Ethereum, Cardano. Bitcoin, 19,600, 20,000, somewhere in that region. Ethereum, 1370, 1330, somewhere there. Cardano, 29 to 31 cents. Watch over the next couple of weeks to potentially make that, and we get that little dip earlier than the end of quarter one, which was what I originally thought we were going to get back at the beginning of January. I thought we were going to have to wait till the end of quarter one, but it's looking like middle of quarter one we could be getting a nice little good dip to then let another rally come at the end of quarter one.
Mm-hmm.
That's what I'm kind of looking at right now. There's a lot that could change that, but that is what I'm fully expected. I'm very interested, even though I won't be able to watch it live. I'm very interested to go back and watch and listen to what Jerome Powell says in that press conference.
Mm-hmm.
What about you, T-Shirt? What are you thinking?
Well, let me just make clear, because Cryptex asked a good question in the chat, just wanting to make sure exactly the schedule. So the decision comes out on February 1st. Okay,
Right.
Meaning the rate, is it going to be 25, 50, 0? What is it going to be? It's going to print on February 1st, and then at 2 p.m. Eastern Standard Time, and then pretty much immediately after at 2:30 Eastern Standard Time, there's going to be the press conference. The meeting, which is pretty much irrelevant to us, starts tomorrow. There's a meeting where they get in there and they start talking, and that doesn't happen. Nothing about that leaks to the media or to the retail like you and me. So it's kind of irrelevant, but that's when their meeting starts, but the actual data doesn't come out to us until February 1st. Okay, and the other thing that's important to remember is that the ECB and the Bank of England print their decisions very shortly after. Mm-hmm. So they print theirs on Thursday. The EC, and on the same day. I'm a little bit shocked by that. Usually they try to stagger them out a little bit, but that's not going to be the case. So those will also move markets pretty significantly too. And it's going to be an interesting week, guys. Very, very interesting. And on top of it all, we haven't really talked about it, but earnings. There's going to be a lot of earnings coming out this week. We shall see how those go. I have not really been prepping for those too much because I usually stay out of earnings. It used to be a good way to play the stock market, but ultimately these days it has become pretty crazy and unpredictable. If just because you think that a company is going to beat earnings and then they do, and you're thinking that was going to be bullish, that doesn't always necessarily mean that the price is going to go up. These days, it should in theory, and sometimes, and most of the time it still does, but sometimes it doesn't, and that's because there's a lot more data that comes out, and if there's a bit of data that prints that doesn't go the way that the market wanted it to, then it'll just sell off based on that one piece of data that wasn't necessarily the headline data. Call it market manipulation if you want, but
yeah.
Ultimately, I don't play the earnings, but there are big earnings, and it's more of a reaction. It's more, you have to kind of react to what those earnings are saying. Obviously, underperforming companies in the United States is not going to be good. We want companies to have good earnings, showing good, robust margin in the fourth quarter, and we shall see if we get that. Did we talk about the Fear and Greed Index yet?
No, I don't think we did, but it's going to come down here. And what I was going to say to kind of wrap up, and we're wrapping up the show too, but what I was going to wrap up my take is, I didn't say it, but here's the one thing, be prepared for. This is why this press conference should be very important. What does happen if Jerome Powell comes out and says, hey, loving what we're seeing. We knew we could accomplish a soft landing. We love where inflation is. We love where the economy is. We love this stuff. This is 25 basis points because we want to stay, on top of this, but we're seeing signs that maybe we can cut down the yield. If he's dovish, watch Bitcoin jump through 25,000, start heading towards that 28. Mm-hmm. And then at that point, I've seen some people talking about 35, 36 already, which I think is way too early. Yeah. But if he's dovish, I will start to open up my brain to maybe we see above a 30 here within the next couple of months during another rally. So it's going to be interesting to watch that. But you were asking about the Fear and Greed Index. Fear and Greed Index, this one, you got it on your screen?
Yep, got it here. 61.
Skyrocketing.
It's crazy.
Yeah.
And then on the chart, you can see really starting to pick up some momentum. Now, that's going to probably correct depending on how the FOMC goes. If we get a 50, which is definitely not what the market is pricing in right now, then that's going to obviously correct. If we get 25, we could even still see that come down.
Well,
but
and interesting note, this is now officially in the last 365 days. Mm-hmm. This is the highest. This is higher than what we had back on my birthday, March 28th last year, when we hit that peak at 48,000.
You hear that, guys? That's Tim's birthday, March 28th.
It's going to fall again, obviously, with the dip that we just saw today. Tonight, I'm expecting to print probably back in the 50s. Mm-hmm. And I want to see how big it drops, because I'm sure some people woke up this morning seeing how far it dropped, nearly $1,000, almost $1,000. Mm-hmm. I want to see what people think about it then. But Max, we haven't had 61 since all the way back since close to right after all-time highs. Mm-hmm. After all-time highs, in December, that's when we saw some levels because we had a big drop in December/early January from like levels around 70 all the way down to about 55 or so. So
Yeah.
I want to see what happens tomorrow. We'll definitely cover that on tomorrow's show.
Oh, wow. We are way over. I wanted to mention one thing before we left, which is Tim mentioned when is the Ethereum update going to happen, Shanghai? And the developers are targeting March for that, March of this year.
I think that's right.
So just keep that in mind.
Perfect.
Wanted to cover all our bases there, dot our I's, and cross our T-shrooms.
Wow. I love that. That's going to be a new thing. Cross your T-shrooms, everybody.
Love it.
Well, guys, that is all we have for you in this episode. Thank you to everyone who continued to watch. I know we ran a little long. We still have 100 people watching. Go ahead and smash that like button. We have at least like 6 people who have not smashed that 4-fingered mitten. Make sure
Charts Prime is going to be on.
Okay.
Charts Prime is going to be on Wednesday.
There we go. Yeah, on Wednesday, our super guest Wednesday, we're going to have Army Piper from Charts Prime joining the show. So you don't want to miss that. It's going to be really interesting. By the way, Charts Prime is something I'm looking at. It's a tool similar to like Luxalgo and Market Cipher and stuff, but it does things different. And I'm learning it right now because that's another thing that might come to the show. So maybe we'll get him to open up a little bit of Charts Prime for us and get some of that TA.
Here's what I'll say about that tool. It takes a chart and it makes it prime.
Wow.
That's what I've found about that tool.
That's one way of putting it, yes. Well, guys, that is all we have for you in this episode. We love each and every single last one of you, and we will see you tomorrow, once again, 9 to 10 a.m. Eastern Standard Time, unless you're in our Discord, in which case we'll see you very shortly because we'll be talking all day about everything happening. With that said, though, you guys have a great day. See you tomorrow.